Hi everyone, this is Rob Roy and welcome to the Elliott Wave Elite U.S. Market Update. Now the market's rebounded this week and it's interesting because every single day the market pundits have to come up with, I don't know why, but they have to come up with some sort of reason of why the market's doing what it's doing. One day it's going down because there's concerns about the Turkish lira. The next day, well, the lira is stabilizing, so we're moving back to the upside. Perhaps just the market's move based on the action of the masses of traders. That's how the markets move. There doesn't have to be a specific reason each day of why they move, but it sometimes just becomes humorous to listen to the pundits. We moved to the downside in the wave 3 here. We bounced back to the upside. Remember, we talked about this last week. We've talked about it over and over and over again. When you see this 4 here, it does not mean that the wave 4 is underway. It means that if the wave 4 started, that's where the target would be. Right now, we are still in the wave 3, and if we break these highs, we will get a relabeling of the 3, confirming that the wave 3 is still indeed intact and moving forward. Interesting to move to the SPY and bring volume into the mix. You could see that we did have an above average volume day on this down day, which was on the 15th of August. But note that on the two rebound days, on Thursday and Friday, we did have increased volume. Now, it didn't hit the average point. It didn't break the average volume, but it was a little bit better volume than what we had when the market was moving up to where the wave 3 was labeled, where we had declining volume, and that kind of set us up for this pullback and then move back to the upside. But the fact that volume was decent moving into the end of the week, we did have expiration Friday, but that hasn't been as significant of a volume activity as it once was. Volume is spread out through expiration week, going all the way back to Wednesday of expiration week is when some of the volume begins to kick in, and that was noted by the down day. So that above average volume on Wednesday, some of that had to do with some of the fund managers making their end of the month adjustments earlier in the week rather than everybody just waiting on Friday, which is how it used to be years ago. Not like that anymore. So we'll see if we can break those highs this coming week. We are still obviously in this testing process here of the recent wave 5 high from back at the end of January. And if we can break that high in a wave 3, then we are off to a new wave 5 high. Hasn't happened yet, but if it does happen, and the increased volume would say that we have an opportunity for that to occur, then we could have newer highs on the way before the end of the year, as you can see by what's forecast. Looking at the VIX, note this. Now, this is very important on the VIX because we talked about how we had the break back above 12. So we had the breakout day on the 10th. We had a confirmation day on the 13th, and then we've moved back and forth, but we're coming back down to that 12 level, and we're going to test that 12 level again, it appears, at this point in time. Now, will that act as support as it has? Will we break below that? Remember, we did not get the confirmation day on the way down, so we broke back above it. We'll see how things handle this 12 level, and if that indeed acts as support once again, keeping the increased volatility period intact, or if we start to move into a period of lower volatility. We have midterm elections on the horizon here in the U.S. One would think that volatility is going to remain, but the market's going to do what the market's going to do, and that's why we're technical traders, because we follow along with what the market's telling us. We don't trade by what we think the market is going to do. Looking at the dollar continues to move up. Really nice wave 5 extension now. We talked about this quite a while. All of this is really pretty classic action. We had the strong wave 3. We consolidated that. Had a little bit of a pullback in the wave 4. Consolidated that. Went through some sideways consolidation in the wave 5 and then broke back to the upside. And we'll see if the dollar can power higher from here with what's going on geopolitically, with the tariffs, etc. The U.S. is in a pretty strong position economically, and the dollar is reflecting that. There are some talks coming up on the horizon between the U.S. and China. We'll see if that affects things, if we can work on some trade that the U.S. feels is a fair agreement, then perhaps the dollar weakens just a little bit on that news. We'll just have to wait and see. It's way too early. It's all speculation down the road. But for now, the dollar has basically done what you would have expected it to do, even though there was a period of time early in the year where we were perplexed that the dollar wasn't acting as you would have expected. But the technicals weighed that out, and we do have the dollar reacting according to the economic reports that are coming out of the U.S., showing that our economy is indeed on good solid footing. The 10-year note, though, is still very interesting. We've still got these sideways ABCs, the flats that are going on following that wave 5 high that occurred way back in May. And until we come down to this wave 4, we are still in this consolidation period. We may actually hit that 4, but we'll see if the money moves back into bonds, pushing interest rates lower. That would forecast that this wave 5 this wave 3 in the U.S. markets may be coming to an end, and the wave 4 beginning. However, if the interest rates do begin to move back to the upside, then that would show us that money is actually moving back into equities. And if we take out that previous this previous 5 in the market, if this current wave 3, takes out that previous 5 in the market, then you would expect money would flood back into the equities market, and that could be an environment for interest rates to move back to the upside. I did want to share this. We talked about this last week on how with ESRX, they're in merger acquisition talks, and that is one of the scenarios, where tend to back off trading positions regardless of what the power of Elliott wave is telling us. In this case, maybe that was a mistake because the wave 3 did win out and ESRX continued to power higher. So Elliott wave showing you that, hey, we're in a strong wave 3 and that won out. I still hold true with my own personal beliefs that when you're dealing with stocks that are in merger acquisition talks, it's too much of an unknown, and I just tend to stay away from those. But I did want to show you that even though that was my view, the wave 3 won out here. You have to make your own determination there. Just trying to guide you along with my experiences over the past 20 years of trading, but it doesn't mean I'm always right. I'm certainly not always right. Nobody is 100% right. No indicator is 100% right. You're well aware of that. So every now and then when I'm wrong, I want to point that out too, because we've been awfully right for a long number of months now. ULTA is relabeled into ABCs. As you can see here, if we were to go back in time to the point where we had that wave 4 and we were in the wave 5, we ran out of time on the Elliott wave. That's why it relabeled into that the ABC corrective modes because of the time constraints. But as far as trading positions, what was the wave 4 low is still holding. So for this point in time, still staying in the butterfly that we have up to the upside. If we break where that A is now, where it used to be the 4, then you close the butterfly out. But we're now in the last month, which is in a negative actually, because butterflies don't necessarily hurt you with time decay like a lot of other long positions do in the world of trading options. So we're still okay from a time standpoint. In fact, if ULTA were to power higher from this consolidation here, and you can see that we have a small triangle here, a little bit of a descending triangle, and you could certainly make a case for, well, wait a minute, it's not a small one. You could use those lows all the way back here, and then say that up from where that B is labeled, that you have a large descending triangle. I wouldn't argue with that, but I'm looking more short term at this point to figure out, are we going to explode higher from here, or are we going to break down below that A? But for now, still holding that butterfly. It's a September butterfly, so now we move into the September expiration month. If we move to the upside, hey, that'll end up turning out great. If not, then we close the position out and we move on. We talked about a couple directional positions last week with Lulu, and that's held up pretty well considering the up and down nature of the markets over the past couple of weeks. We did have the one down day on the 14th, but we're back up near that wave 3, so it's staying very strong for a potential continuation of that wave 3 to the upside. And then we had PLCE, which was a different position where we had a wave 5 buy where we're moving back up to the previous wave 4 target, and that's held in there very well. Also, look at that nice move to the upside on Friday with a decent tape in the U.S. market. So these positions are staying very strong in this back and forth market, trying to figure out what it's going to do, move down, move back up, reacting to news, whatever you believe is occurring. And I think it's just all technicals playing themselves out as labeled by the Elliott waves. So those stay very well intact. And then the non-directional position that we had on CLR is also still very much intact. There's been no breakout yet, but the triangle is still very well formed. Now I'm going to draw it right here for a second to show you that, again, I've just reiterate this over and over again, the importance of a follow-through day or a confirmation day. We had the breakdown on the 16th, but we moved back up the next day. So we did not get a breakout. So when that occurs, you redraw your lines. And so what happened is now we just have a little shallower of a triangle, but it's still a very well-formed triangle, and the triangle is still in place in our alerts. We are waiting for this to break out, and look what happened on Friday. We have a doji. So we opened at 63.01. We closed at 63. It was almost a perfect doji on Friday. For those of you that may not be familiar with candlestick charting, a doji is when you have an open and a close at roughly the same price level, and that represents indecision. When you have a doji near the point of a triangle, quite often that means that the breakout is right around the corner. It's in the very near future. So we would expect to see some sort of a breakout of CLR here coming up this week with this doji that occurred on Friday. So that brings you up to date on where we are. I mentioned to you last week that this week was going to be very interesting in the markets. It did turn out to be quite interesting, where it looked like we were going to break down, and we turn around and move back to the upside. Our wave 3 is still intact. Can we take out those wave 5 highs from back in January? That is going to be what everybody's watching as we move into this week. Hope you've had a wonderful weekend, and we'll be back to talk to you again next week. Take care, everybody.